Imagine this. It's 2030, you're kicking back, checking your portfolio, and bam, you're a multi-millionaire. But then you realize something. You could have been a multi-billionaire if you hadn't missed out on some key investments back in 2025. Yeah, I know, it's a scary thought. 2025 has been a wild ride so far, right? The markets are like a roller coaster, up, down, sideways, loop-de-loop. It's enough to make you want to bury your money in the backyard and forget about it. But here's the thing, that's the worst thing you can do. Because with all this uncertainty comes opportunity. That's why today, I'm sharing 5 stocks I'm loading up on in 2025. These are companies I truly believe in, companies that have the potential to absolutely explode in the coming years. One of them is a brand new addition to my portfolio, and let me tell you, I'm incredibly bullish on this one. So, grab your coffee, buckle up, and let's dive into the 5 stocks that could make you a fortune by 2030. Oh, and before we get started, smash that like button, subscribe, and hit the bell notification so you never miss out on my top investing insights. First on my list is my largest individual stock holding, Berkshire Hathaway. You guys know I love this company. It's like the ultimate safe haven in a sea of market volatility. Even with most stocks struggling this year, Berkshire Hathaway has been holding steady and even growing. And there's a good reason for that. Warren Buffett, the Oracle of Omaha, the GOAT of investing. This guy is a legend, and his track record speaks for itself. Berkshire Hathaway is a massive holding company with its fingers in everything. We're talking significant stakes in companies like Apple, Coca-Cola, American Express, the bluest of the blue chips. But it's not just about stocks. Berkshire Hathaway also owns fully operational businesses in industries like insurance, Geico, anyone? Energy, railroads, and even retail. This is a company that's built to weather any storm. We're talking over $1 trillion in market cap and a solid PE ratio of just 10, making it an excellent value play in today's market. And here's the kicker. Berkshire Hathaway is sitting on a mountain of cash, over $160 billion to be exact. That gives Buffett the firepower to make major acquisitions or invest heavily when everyone else is panicking. Talk about sleeping well at night. Now I know what some of you are thinking. Warren Buffett isn't getting any younger. He's in his mid-90s now. But here's the thing, he's already trained up a rockstar leadership team that's more than capable of carrying on his legacy. Berkshire Hathaway is built to last, and I'm confident it will continue to outperform for decades to come. Are you holding Berkshire Hathaway in your portfolio? Let me know in the comments. Alright, moving on to a company that's been making headlines left and right, Microsoft. Now, if you want exposure to the AI revolution, Microsoft is an absolute must-have in your portfolio. I'm talking about a company that's not just riding the AI wave, they're the ones driving it. Microsoft was an early investor in OpenAI, the geniuses behind ChatGPT, and they've been strategically embedding AI across their entire ecosystem. From their Azure cloud platform to their suite of productivity tools, Microsoft is leveraging AI to gain a massive advantage over the competition. But here's what really gets me fired up. Microsoft's new Majorana 1 chip. This thing is a game changer. We're talking about a quantum computing chip that could revolutionize everything from medicine to finance to cybersecurity. This technology has the potential to solve problems in minutes that would take classical computers centuries to compute. The possibilities are mind-blowing. And let's not forget about Microsoft's rock-solid financials. Analysts are projecting a 13.1% revenue increase in 2025 and 14% growth in 2026. We're talking about a company with a market cap of nearly $3 trillion, a PE ratio of 32, and according to investing.com, it's actually undervalued. With its dominance in AI, cloud computing, and enterprise software, Microsoft is a long-term winner in my book. This is a stock I plan on holding for years, if not decades to come. Okay guys, this next one is a no-brainer. We're talking about Alphabet, the parent company of Google, and let me tell you, it's on major sale right now. I'm talking about a once-in-a-decade opportunity to buy a tech giant at a discount. Yes, the stock has taken a bit of a hit recently, down about 10%, but that's just noise in the grand scheme of things. Alphabet remains an absolute behemoth in the tech world, with a stranglehold on the internet search market. We're talking about 75% of the desktop search market, and a whopping 85% of mobile search. Now, I know what you're thinking. What about all the regulatory concerns and lawsuits? Aren't those going to hurt Alphabet in the long run? And yeah, there's been a lot of noise about that lately. But here's the thing, history tells us that these issues rarely result in company-killing breakups. Instead, they usually lead to fines or divestitures that barely dent a tech giant like Alphabet. Meanwhile, Google is making huge strides in AI, including their new AI-powered shopping feature that can generate product images based on descriptions. It's like magic, but it's real and it's going to be huge. And let's not forget about YouTube, which continues to grow as the dominant media platform on the planet, and Google Cloud, which is rapidly expanding in the AI-driven enterprise space. With a ridiculously low PE ratio of just 22, this is a rare discount on a tech giant that's poised for long-term growth. Trust me, you don't want to miss out on this one. Alright, now we're getting into the riskier plays, but with potentially massive upside. I'm talking about Palantir, a company that's at the forefront of AI-driven data analytics. We're talking about a company that works with both governments and corporations to provide next-generation data intelligence solutions. Think of them as the real-life version of what you see in those spy movies, but even more sophisticated. With over $325 billion in AI investments announced for 2025 alone, Palantir is in a prime position to capitalize on this explosive growth. Their AIP, or Artificial Intelligence Platform, is designed to help businesses integrate AI into their operations more effectively than ever before. Now here's the catch. Palantir is not for the faint of heart. This is a high-risk, high-reward play. The stock is currently trading at around $81, with a sky-high PE ratio of 400 and a fair value estimate of just $46.50. That means that while the company has massive upside potential, it also carries significant volatility risk. If Palantir can continue securing high-value contracts with the government and expanding its reach into private sector AI applications, the stock could explode in value over the next decade. But as with all high-risk plays, proper risk management is essential. Don't go all in on Palantir. Instead, allocate a small percentage of your portfolio to this stock and be prepared for a bumpy ride. Alright guys, last but not least, we're talking about the newest addition to my portfolio, SoFi Technologies. This is a company I've had my eye on for a while now, and I finally pulled the trigger. SoFi is a game changer in the financial services industry. They're offering banking, loans, investments, insurance, you name it, they've got it, all designed for millennials and Gen Z. These guys are the future of finance, and they're coming for the traditional banks with a vengeance. Since going public in 2021, SoFi's membership has exploded from 3.4 million to over 10 million. That's insane growth. But here's what really excites me. Despite its massive growth, SoFi still has just 1% of Bank of America's deposit base. That means its potential upside is enormous. SoFi's super efficient, low-cost, tech-driven banking model gives it a unique edge against traditional banks, which are weighed down by outdated infrastructure and legacy costs. And let's talk about convenience. SoFi's ability to provide student loans, personal loans, mortgages, and investment accounts all in one platform makes it a one-stop shop for all your financial needs. This is the kind of convenience that millennials and Gen Z crave, and it's a major reason why I'm so bullish on SoFi's long-term prospects. Right now, the stock is down 11% year-to-date and trading at just $12.25, making it an exciting entry point for long-term investors. This is a company that could easily 10x or even 20x in value over the next decade. So there you have it guys, my top 5 stock picks for 2025. Remember, we're living in uncertain times, but that's exactly when the best investment opportunities arise. If you want to build wealth, the key is to buy solid companies when others are fearful. Don't let the market noise scare you away from investing in your future. Now I want to hear from you. Which stocks are you buying this year? Drop a comment below and let me know. And don't go anywhere. Keep your investing momentum going by watching one of these 2 recommended videos next. Click on them now, and I'll see you there.